Depending on who you talk to and where you are getting your money advice from, you could be getting a lot of competing information. And I know that I also have a tendency to do that, and I don't want to contribute to the noise. So I really do, in this podcast, try to break down things into small, bite-sized things. So I want to share with you some tangibles today, because I spend a lot of time talking about mindset and emotions and feelings. And another part of feeling really comfortable and confident in getting your mind and money in balance is understanding some of the basics depending on which decade of life you are in. So in today's episode, we're going to tackle 6 things you need to know if you are in your 30s. Welcome to Mind Money Balance. I'm your host, Lindsay Bryan-Podvin. I'm a woman of color, popcorn connoisseur, and one of the first financial therapists in the United States. This is the weekly podcast all about making money feel good in your relationship. The no guilt, no shame podcast, so you can stand in your power as a couple. Let's go. So let's kick off this episode with a little therapizing. Again, not a real word, just making it up. But I think one of the things we have to think about when it comes to money is really getting those thoughts in order. So I know you've heard me say this before, but whether you're in your 30s, 20s, or 70s, you have to work on getting rid of that negative self-talk if you want to have a healthy relationship with money. So before we set any financial goals, we first have to smash those unhelpful thoughts. So instead of, I could have done X if I saved more money, or I don't have to worry about my credit card bill because it'll just sort itself out. We have to really check in with our wise self and really make sure that those negative beliefs, those thoughts that kind of run through our mind, are not dominating if they are not healthy. So instead of, I could have done X if I saved more, we want to transfer it to something like, even when I save $20 per week, I'm working toward meeting my goal. Or instead of the naive one of, I don't have to worry about paying my bill, it'll just sort itself out, we need to shift to something that's a bit more realistic, which is, whether or not it sorts itself out, it's my responsibility to make sure that I get my credit card paid in full and on time. So that's first and foremost, is we have to get rid of those unhelpful thoughts that aren't really rooted in truth. Number 2 is to figure out what is going on with your credit, specifically your credit report and your credit score. Now, I know those things get thrown around a lot, but they are similar but different. So your credit score is a 3-digit number that tells lenders how risky it is for you to be lent money. A credit report tells you the different things that are contributing to that score. So on your credit report, it will include things like car loans, student loans, whether or not you have paid utilities on time. Most landlords do not report to the credit bureaus, but there are a handful that do. So you're going to want to know if that is there as well. But anytime that you are essentially asking for a loan of money, whether it's through a credit card or whether it is through something a bit more traditional like a car loan or a mortgage, it will go on your credit report. And on that credit report, it will tell you if you've been paying your bills on time, if you've been paying them late, if you are delinquent, etc. So we really want to make sure that our credit report is in good order, so that way when we look at our credit score, we can know whether or not that number is being really represented by what's actually going on. So let's go back to the credit score. So I mentioned it's a 3-digit number, and we want to push that number up higher. Once we hit 720, 740, we are really considered excellent by most lenders. So once you hit those numbers, anything above and beyond that is really just a bonus. But the reality is most lenders are going to see a number of 720 or 740 or higher and go, I'm not worried about lending this person money. Therefore, you're going to be rewarded because you often will be extended more credit, meaning more potential money, than you would if you had a lower score. And the other bonus of having a good credit score is that not only are you extended higher credit limits, but oftentimes you get better interest rates. So you usually get lower interest rates than if you had a lower credit score, which I know is so maddening, right? Because it's very much the rich get richer in a lot of ways. So if you have a good credit score, then you have to pay less interest. So you're more likely to probably be able to make your payments in full on time. Trust me, this is not lost on me that it's not a perfect system. I'm just sharing with you what you need to know about money in your 30s, and you have to know what's going on with your credit score. I don't want to get into the nitty-gritty, but let's just do a brief overview of where that number comes from. It comes from mostly a combination of your payment history, right? Paying your credit card bill in full on time, and how much money you owe to different lenders, okay? That's the bulk of it. Other things that contribute to it are the length of credit history. So have you had a credit card or a car loan since you were 18, or is this pretty new for you? The other thing that comes into play is how much new credit, how many new credit card lines or limits have you applied for recently, and which types of credit. So are you looking at things that are being held by collateral, such as a home or a car, or are they things that don't have collateral, like a credit card, okay? So those are some of the big things. But the biggest things that contribute to your score is how much money you owe, and are you paying it on time? Now, most credit card issuers today, a lot of banks allow you to see your credit score pretty much monthly for free, so you usually have a good idea of where it's at. If not, you can use a free service like Credit Karma, Karma, or Credit Sesame. And I'm not sponsored or affiliated with either of those, but those are just both services that I like. And if you want to get an idea of what's going on in your credit report, you can get that for free annually at annualcreditreport.com. If you are applying for a credit card or a car loan or a student loan and they pull your credit, you also have access to your credit report at that time. So that's another way that you can get your credit report if you don't want to go through annualcreditreport.com. Okay, so that's number 2. Number 3 tends to fall into the blah, 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 blah. Don't want to talk about it. Don't want to think about it. But it's life insurance, okay? And we have to talk about life insurance pretty much always, but definitely in our 30s, okay? If you have a partner, if you have kids, if you have stepkids, you definitely need life insurance, okay? Because life insurance means that if you were to perish, that the people who you love and are attached to you financially in some way are going to be okay financially, right? Obviously, it would be an emotional hardship if somebody were to lose their life, but we definitely want to make sure that we are protecting the legacy of ourselves by protecting our loved ones by getting something like life insurance. Most life insurance policies that you need in your 30s, I'm not a broker, I'm not offering advice, I don't sell life insurance, I'm just sharing information with you. Most life insurance policies for people in their 30s are going to be term policies, meaning they last a term of time. They usually last 15 to 30 years. If you're to die during the time you are paying on your life insurance money would then go to whomever you listed as a beneficiary. How much you need in terms of life insurance depends on how much debt you have, on what type of lifestyle you lead, on how many people rely on you for money. But you want to consider, I think a nice rule of thumb is like, how much debt do you have? You certainly need at least that much in life insurance, and then adding on more for sure if you have children or if your spouse is unable to work. So that is something you definitely need to consider. And the nice thing is, if you are a relatively healthy 30-something, life insurance policies are relatively inexpensive to make sure that you are crossing your T's and dotting your I's to make sure that you are protecting your loved ones financially. Number 4 is to really start working on bulking up that retirement. Now, there are so many different rules of thumb of how much money you need in a retirement account. I like a general rule of thumb, which is having 2 times your annual salary in an investment account that is in a retirement account. Okay, I know, I told you this was going to be like a heavy one, but we have to understand this stuff because we are getting older now and money and time are, hang on. Number 4, invest in retirement. I really hammer home that we should be investing in retirement and not saving in retirement. And my friend Erin Lowry really breaks this down in her book, Broke Millennial Takes on Investing. Because we want to make sure that in our investment vehicles, particularly in our 30s, we want to make sure that underneath our IRA or 401k or SEP, whatever it is that is holding your retirement, that you are investing in stocks. I'm not going to get into all of the details there, but you want to make sure that you're contributing to your retirement accounts, particularly while you're in your 30s, so that it has time to build up with compound interest, okay? This is hugely important, and you can start saving right away, okay? You are not too old for compound interest to work in your favor. You can start with as little as 1% of your salary. You can do this yourself. You can do this by connecting with your HR department. You can call whomever it is that is holding your retirement account, whether it's something like a Fidelity, Charles Schwab, Vanguard, whatever it is, to help you get that set up. And you can go through a lot of different steps, but the reality is it's pretty easy once you get it figured out. And once you start contributing to that retirement, you are off to the races in making sure that the money that you're putting away is not only going to be there, but it's going to grow over time. So that is number 4, is investing in your retirement. In terms of how much to invest, it really depends on the person. You can put away anywhere from 8 to 20% if you want. A lot of people who are in the FIRE community, that's financial independence, retire early, they love to contribute way more. They like to contribute like 50% of their income into retirement. So you get to decide what's right for you. Honestly, Google retirement calculator, play around with some numbers there to get a good sense of how much money you need to be putting away. Number 5 is really make sure that in investing in your future, you're also making sure that you're getting rid of liabilities that aren't helping you. So it's really important to be paying off high interest debt when you are in your 30s. So this is your credit cards that could be anywhere from 16 to 24% interest. We want to be paying off those student loans that are not our federal student loans, since they tend to have higher interest rates. The fewer liabilities that you have, aka the less money you owe other people, the more financially stable you are. And I'm not anti-debt. This is not a tirade about getting rid of debt and all debt is bad, blah, blah, blah. This is really about feeling better with your financial footprint. A 2013 study from Anxiety, Coping, and Stress found that those with more financial strain endorsed having more symptoms of depression, anxiety, and stress. No surprise there. And in the interest of connecting our mental health and well-being with our financial well-being, not just because May is Mental Health Awareness Month, but because every month it's important to be talking about the connection between mental health and money, we want to make sure that if there are ways we can reduce our anxiety and stress, that we do it. And a great way to do this in your 30s is aggressively paying down debt that is not serving you. Got it? This leads into number 6, which might sound a little counterintuitive after running you guys through numbers 4 and 5. Splurge safely and intentionally and in alignment with your values, okay? So much financial noise out there is about cutting. It's about cutting your spending. It's about cutting down your debt. It's about cutting your expenses. But we also want to be enjoying the fruits of our labor. By the time you're in your 30s, you are getting into the years of your life where your income should be climbing, right? So you should be having more disposable income. Think about what you want that additional money to do for you, okay? Whatever it is that makes you feel good, put your money towards that. If that means earmarking some money for vacations or for clothes or for organic food or for nice cars, I don't care. But whatever it is, once you have kind of gone through the other steps, make sure that you're spending money that feel good to you, right? So let's recap really quickly the 6 things you need to be doing and need to know about money when you are in your 30s are number 1, eliminating your self-limiting beliefs and negative self-talk. Number 2, understand credit and know your credit score. Number 3, get life insurance yesterday, particularly if you are seriously partnered or have a child or children. Number 4, invest in your retirement. Make sure you're contributing a good amount of money and make sure that you are making these years work for you. Number 5, pay off all debt that has high interest, or at least start working really hard on paying it down so we can dial down some of the stress that's associated with financial strain. Number 6, splurge in alignment with your values. Got it? So, I would love for you to decide on 1 or 2 of these things that you're going to work on, or if you've already started working on 1 or 2 of these things, take a screenshot of this episode, tell me what you're working on, and let me know. I love learning more about what is resonating with you, what you are working on, and what you are doing in your financial life. Make sure to tag me at Mind Money Balance, and I will, with your permission, share it out on my stories as well. So I'm so curious which ones you're working on and which ones are next on your to-do list. If you love this episode, take a screenshot and tag me on Instagram at Mind Money Balance with your favorite takeaway. I love seeing what resonates with my listeners and sharing it in my stories. Thanks so much for tuning in. I'll see you next week right here. Neither the host or guests are rendering legal, accounting, clinical, medical, or other professional information. If you want professional help, please seek it out.